Okay, we should be live right now. We should be live. I'm going to check the audio here right quick, and then we're going to get right into it. I apologize for the problem earlier. And then we're going to get right into it. Okay, good. We have volume this time. Great. I'm not sure how that happened last time, but it happened. So we always get weird things when it comes to live streams, right? There's always a problem. Usually it's my nerves that get in the way, and I usually have a mess up with saying something, but here we are. All right, let's go. Let's rock with this thing. This is the quick take on the market today. There was a lot of data, so I was late to getting to the live stream. Then the live stream didn't work, so now here we are again. Hopefully you can hear this live stream. I did a check. The audio is coming through, so we're going to rock with this thing. Maybe going later, we got a few extra eyeballs and a few extra investors hanging out with us this evening. We're going to talk about the CPI report. There's interesting things about that, and then what happened in the market, why it happened, and trying to figure out a game plan for moving forward. All right, here we go. Let's rock with this. One more quick housekeeping. One more quick little side quest, and then we're going to jump right into it real quick. Okay, thank you. Just a couple more people, and then I'm going to get right into it. I'm almost done with this. One quick housekeeping note here. Usually we jump right into it. Okay, there we go. All right. We are doing this. The volume is there. Okay. All right. Welcome everybody I'm glad you're here. I appreciate everybody joining me. We're going to get started in just a quick moment. Almost there. One more little tap over here, and then we'll be all set back up again. Maybe I should have gone through all of this before jumping back on the live stream because the audio was cut out. Okay. All right, let's rock with this. Let's roll. All right. Welcome back, investors, to Ticker Time News. I am Adam, and let's just get started with what moved the markets today. And that was the April CPI report, which failed to live up to the disinflation hype, if you want to call it that. Total CPI increased 0.3% month over month. And let's pull up the report right here. 0.3% month over month in April, and core CPI increased 0.6% month over month. Now, the year over year changes were not disinflated. I'll use that word. I'm not sure if it's a real word or not, but changes were not disinflated as much as market participants had hoped they were going to be. Total CPI was up 8.3% year over year, down from the 8.5% year over year March number, and core CPI was up 6.2% year over year, and that's down from the 6.5% year over year number from March. Now, the key takeaway is that this report provided some leeway that suggests just maybe peak inflation might have been hit in March, but with the moderation not as significant as maybe others had hoped for. And it also stirred concerns that inflation might stick around at persistently high levels longer than anyone would like, including the Fed. So we have inflation that might have made a topping part, right? Inflation might have topped. We might have seen peak inflation in March, and now April's down just so slightly. But the problem is, what if inflation plateaus? It doesn't go up, it doesn't go down. It stays elevated. That is a bad scenario, and that could be what's happening, and that could be what investors are thinking, and that's what finally flipped the markets and caused them to go lower today. Now, the food index was up 0.9% month over month and was up 9.4. I'm sorry. Let me back up a second. I got my numbers mixed up. I think the food index was up 0.9%. Make sure I'm getting my notes straight. 0.9% month over month and was up 9.4% year over year. Now, that is up from the 8.8% gain in March. Now, the energy index, it declined 2.7% month over month and was up 30.3% year over year. Now, that is down versus the 32% in March. And then the gasoline index dropped 6.1% month over month and was up 43.6% year over year. Now, that is down from the 48% in March. And then the shelter index, that was up 0.5% month over month and 5.1% year over year. Now, that is slightly above the 5% in March. So, what does all this data tell us from the consumer price index? That inflation may be plateauing. We may get a plateau effect with inflation, and inflation stays high, doesn't go up, doesn't go down. That is nearly as bad as inflation just continuing to go up. That's a possibility, and that's the probability that investors are thinking. Okay, let's get into the markets today and what happened over here. All right, this is the S&P 500. This is the daily view on the chart. Now, the S&P 500 fell 1.7% on Wednesday as the market was pressured by pronounced weakness in mega cap stocks, despite a decline in long-term interest rates. And we're going to look at the 10-year and the 2, but the 10-year is the longer term. And mega caps are going to be a theme of what I'm talking about today, and I want it to be hammered home crystal clear. Growth concerns also persisted as hot consumer pricing data for April reinforced expectations for the Fed to stay aggressive with tightening monetary policy. Plus, the worries about the meltdown in the cryptocurrency market over stablecoin. Right now, if I peek in here on Ethereum, it's down 11.5% on the day, and Bitcoin is down 6.8% on the day right now. So that cryptocurrency meltdown also contributed to another day of selling pressure on Wall Street. The Nasdaq, let me pull the chart up here for the Nasdaq. Here we go. The Nasdaq hit a new low for the year. A new low for 2022 was hit. And if we go in here a little tighter, we can see the past today, new low. Yesterday, no. The day before that, yes, a new low. And then a new low before that. So 3 of the 4 past sessions have been new lows for the year on the Nasdaq. The Nasdaq is down 26.6% year to date. That is a big decline. A big decline. If we go and look, the Russell 2000, pull that chart up here. Give me a quick second. My apologies. The Russell 2000 fell 2.5%, also hitting a new low for the year. Now, price action for both the Nasdaq and Russell 2000 underperformed the benchmark index, and the benchmark index is the S&P 500. Now, the Nasdaq having more exposure to the mega cap stocks is taking the brunt of the damage. The Dow Jones, let's pull that chart up. The Dow Jones dropped 1% today. There it is. And it was a new low for the year. The past 3 sessions in a row for the Dow Jones have been new lows for the year. Will it continue? Look at the S&P 500. I'm going to take volume away for just a moment so we can clearly see this. The past 3 sessions have been new lows for the year. Ladies and gentlemen, with the S&P 500 below the 4,000 level, which is a very psychological level, it is a level that investors want to hold on to, but we've been holding for a while, and now we're slipping. If we cannot hold above 4,000, we're going to go down to 3,000. And that's going to take us over a 20% drop for the year from our all-time high on January the 4th. My target, this yellow box down here, bottom right of the screen, this yellow box is the target, and it's where I believe the S&P 500 is going, and that's sitting at 3760. 3760 for the S&P 500. And that right here, this purple line, when it touches this yellow box, that's right about a 20% drop even for the S&P 500. Now, from a sector perspective for today, the heavy-weighted information technology dropped 3.3%. Consumer discretionary, 3.6% down. Those were the sectors that underperformed. And a large part to huge declines has to be attributed to Apple. AAPL is the ticker symbol. And remember, you can do all of this charting at home with me. There is a link in the description of this video for a free account to TradingView. It's where we do all of our charting from. So you can follow along right at home, absolutely free. So Apple dropped 5.18% today. They have a market cap of $2.37 trillion. This is something that we want to focus in on. A big market cap company like Apple dropping 5.2% is a huge amount. And then look at Tesla today. TSLA. Tesla fell 8.3% today. That's another big decline. Market cap, $760 billion. And then you've got your Alphabets, your Microsofts, your Amazons with other big market caps. Those companies are important. Now, I shared a note with Patreon members earlier today on exactly what to be on the lookout for and know which way the market will move as it has continued to work better and better as this market continues to move. As a directional sign for the market, almost like a compass for the market on where it's going on any given day. And if you would like insight like that, then consider joining us by clicking the first link in the description or the pinned comment in the live chat. I'd love to see you there. Okay, back to the sectors for just a moment. Only 3 sectors escaped with a gain today. Energy up 1.4%, utilities up 0.8%, and materials just barely getting there at 0.03%. But the heavy losses of the mega caps was not a pretty sight. The mega cap losses not only weighed on the market cap weighted indices like the S&P 500 and specifically the Nasdaq, but also on risk sentiment, which only seemed to worsen as the day progressed. Initially, there was some relief in the market and kind of like a CPI, the market kind of shook it off. And the initial response to the CPI report was bad. Let's look at the S&P 500 here, and I'm going to show you exactly what I'm talking about. SPX is the ticker symbol that I use to track the S&P 500. Now, I'm going to go into the 5-minute chart, and this is the S&P 500 for today. From the green bar all the way to the right of the screen, that is today's price action. Now, before the green box, that would be right before the market opened at 9:30 a.m. Eastern. The market gapped down. The S&P 500 gapped down because, the CPI data, inflation didn't drop. What do we do? So the S&P 500 gapped down. That was the initial bad response. Then the market opens at 9:30 a.m. Eastern, and the market shot up. Oh, inflation didn't go up. Yeah, let's buy, baby. And the market went up for the first like 30 minutes. And then it slowly creeped up over the next hour or so, but then that was it. Then we hit our high. We hit our high for the day at 10:45 a.m. Eastern. And from there, we fell. And we fell, and then in the afternoon, around 2 or 2:30, I guess investors got a little coffee break because the market went up. We tried to get a little reprieve here from the damage of falling. But it didn't last. It didn't get us back over the 4,000 mark. Remember, that 4,000 level in the S&P 500 is the important part. But it didn't get there. And then we sold off into the close. We sold off. We're heading for 3,000 on the S&P 500. That's what it looks like from right here. Now, I'm going to show you one thing. Tesla, TSLA is the ticker symbol again for Tesla. And I want you to look at this. There's a very similar pattern to how the S&P 500 reacted today. Tesla up right here in the beginning. Well, let me go pre-market, before the market opened, gap down. CPI, bad news, gap down, right? And then we open right at 9:30. We get 10 minutes of red, and then we immediately shoot up over the next 15 minutes. We get to our high of the day for Tesla, which was $809 a share, and then we sell off for the rest of the day. And then we get this little reprieve right here around 2:30 in the afternoon, and then we sell off into the close. Look at Apple, AAPL. Nearly identical pattern. Why are the patterns nearly identical? Tesla, Apple, the S&P 500. Because big market cap companies move the market. That's where you got to be watching. That's where you've got to be watching. That's a clue for you. Now, the monthly figures were disappointing relative to hopes and dreams. Although the year-over-year readings did moderate versus the readings from March, like we went over. Remember, for April, total CPI increased 0.3% month over month, while core CPI, which excludes food and energy, increased 0.6% month over month. Now, after the news settled in, the longer end of the Treasury market appreciated the idea that inflation rates could be peaking. At the same time, though, there was a fearful belief that the Fed would make sure that inflation did peak by tightening its policy in a way that slows down economic growth. Let's look at the 10-year. Remember, you can do this at home on TradingView, US10Y, and that gets you to the 10-year, and you can look at that. I'm going to go back to the daily chart so we can see this baby, how it's going almost straight up. Look at this. Let's pull it back in here. And I'm going to make a bold claim in just a moment. October of 2018, and the 10-year peaked at 3.25. Now remember, the 10-year is more sensitive to expectations for inflation and economic growth. And it fell 7 basis points today to 2.92%. After it did brush up against 3.08% on the heels of the CPI report earlier this morning. And you can see that if I go in a little tighter, and I will in just a moment, but I want to make this bold claim. I think the probability of the 10-year going to 4% is high. The 10-year going to 4%. The probability of that happening is high. That's the bold claim. 4% on the 10-year. Now, when we go in here and look at specifically today, you'll see what I'm talking about. Let's open this up. I'm going to go back to the 5-minute view, and you can see that today we had this jump up right here early in the morning, right after CPI was announced. Let's see, we get right here to 8:15 in the morning. It went up a little bit. 8:20, it's flat. 8:25, it's flat. 8:30, bam! It shoots up right as the CPI data was released. And then it went a little bit higher. And then it slowly came down just a little bit throughout the day. Because it doesn't move much. So when you see these big moves, it means something. Now the 2-year yield, and you can look at that US 0 to Y, and that gets you to the 2-year yield, which is most sensitive to changes in the Fed funds rate. So when the Fed raises interest rates, that can move this significantly. Now, it increased by 1 basis point today to 2.64%. Now, you can see it also had the same reaction as the 10-year in the morning. It popped right at 8:30. Now, go back to the daily view, and you can see it's on a steady incline here. All right, back to equities for a moment, because I want to nail home this mega cap idea about the market. Now, back to the equities here. Smaller and more speculative growth stocks, they continued to bleed today. This time, we've got Coinbase to look at. Ticker symbol COIN, Coinbase. It was down 26.4% today. Market cap, $11 billion. I'm going to write that down, $11 billion for Coinbase. Another one, another growth and speculative. These are fun stocks because they're innovative. Unity Software, ticker symbol is U. Unity Software today, down 37%. Market cap, 8.9, we'll call it 9 billion. We're at 20 billion right now with those two combined market caps. What about another one? What about Fiverr? Ticker symbol is FVRR. Another growth, speculative, innovative company. It was down 25.6% today. All three of these companies, Coinbase, Unity Software, Fiverr, they all fell on disappointing earnings reports and or disappointing guidance. Market cap, 1.1 billion. So we're at $21 billion market cap with those three companies combined. Let me show you one more thing. Apple, let's go back to Apple again. AAPL. Coinbase, Unity Software, and Fiverr. 3 growth companies, speculative stocks, fun companies, innovative, that have just been destroyed this year. A combined market cap of $21 billion. What's the market cap of Apple again? 2.37 trillion. Which one do you think has a bigger impact on moving the market? It is the mega cap stocks. And that is a clue for where you need to be paying attention. Now, I gave Patreon members a very specific ETF to monitor. So you get a basket of all these mega caps to keep track of, so you don't have to individually look at this. Now, Disney reported earnings this afternoon. After the bell, the closing bell, DIS is the ticker symbol for Disney. Disney could be the new king of streaming. Now, Disney reported their earnings after the bell, and they came in with Q2 EPS of $1.08, missing by 11 cents a share. Revenue, $19.2 billion. That was a 23.3% gain year over year, but that missed by $800 million. Disney was down 2.29% today. It hit a new 52-week low. Disney said on their earnings call that their parks are operating on all cylinders, firing away. Disney Plus grew faster than expected in terms of viewers, adding about 8 million subscribers to reach 137.7 million versus the 129.8 million in Q4 of 21, and beating expectations of 134 million. Now, on the whole, including Disney Plus, ESPN Plus, and Hulu, Disney's direct-to-consumers subscribers hit the 205 million mark this quarter, getting a whole lot closer to Netflix's 221 million. What are we, about 20 million subscribers away? A 20 million subscriber difference, about-ish? Disney also says that it's planning on launching an ad-supported version of Disney Plus in the US by the end of the year, matching who? Netflix's move that they announced this last quarter also. Now, Disney did also reaffirm on its conference call that it has, or its expectation, or it has an expectation of reaching 230 to 260 million Disney Plus subscribers by fiscal year 24. If Netflix stayed at the same level, 221 million subscribers, then Disney would become the new king of the streamers. That's fascinating. All right, Disney, I'm watching you. Okay. RIVN also reported, and I just want to touch on RIVN for a moment, electric vehicle pickup truck manufacturer. They reported after the bell today too, ticker symbol RIVN. RIVN was actually kind of interesting. Their Q1 came in at a loss, or the EPS for Q1 came in at a loss of $1.42 a share, beating by 7 cents a share on revenue of $95 million. Now, that did miss by $37.8 million. The stock jumped 6.8% in the after hours on those numbers, also with their reassurance on production numbers. Now, I haven't had time to dig into the transcript of the earnings call for RIVN, but I'll read through that. Now, there's two things I want to touch on right quick because they're in my notes. Oil today, it jumped 5.1% to $105 a barrel amid hope that Shanghai could soon ease restrictions after reporting a 51% drop in new COVID-19 cases on Tuesday. An ease of restrictions would hopefully increase oil demand. That's why it went up. Now, my second note here is about the Fed. Lori Logan was named Dallas Fed president effective August 22nd. And the Senate also confirmed Lisa Cook to the Fed board. Okay, those two notes. Now, that, ladies and gentlemen, wraps up the quick take on the market. What do we do? 31 minutes flat. Pretty good. Hopefully, you got some information to help you become a better investor. If you could, it would be greatly appreciated to click the like button, take the URL, share it wherever you can, and click the first link in the description to join us in beating this market. A ton of great information over there. I'd love to see you there. So click the first link in the description of this video. And I believe it is in the live chat. Yes, it is. Yep, we're back. Hopefully you enjoyed this information. Hopefully you learned something with this information. That's the goal, right? If I can help just one person become a little better at investing, then all is good. So hopefully you pick something up in this video. So I appreciate you for taking the time to watch, to learn, to grow with me as well. Because doing this also helps me to grow as an investor, and we're all on our own journeys. All right. Remember, live stream every day. The market is open. After the closing bell, I go live. Days that there's a lot of data dumps, a lot of data coming out, like today, a little later than usual. So I do apologize for that. Plus, we had the mix up with the first live stream not working. So that took some time. All right, wait. So was the bleed out today due to the Fed member? No. Today's downturn was all due to the CPI data and growth concerns about the Fed raising rates as the economy is slowing down. So I'm still sticking right here on the S&P 500. I think we're going to this bottom yellow box here. We might even break through it and get to 3,000. Now, this was my thesis on a 3 to 6 month time frame. But I think this is going to occur faster than I initially expected. Any bounce we get, we have got to watch a certain group of stocks. And if they get momentum, and I want to be careful because I share information with Patreon members, and I want to make sure they get the first crack at that information before I say anything on a public video like this. But there's a group of stocks that you need to watch, and we talked slightly about it. Look at Tesla, look at Apple for examples. Apple today fell, and that was really bad. Watching the direction of Apple is going to give you an idea of the overall market. Apple being down today, the S&P 500 setting a new low for the year, Nasdaq setting a new low for the year. Dow setting a new low for the year. Russell 2000 setting a new low for the year. Apple dropping over 5%. These are big moves. We might get a capitulation move, which is a big move to the bottom, a big move down, a fear move. And if we get a move like that, and it gets down here to this purple line, that's where we could actually see a bounce and change of momentum, because the market would just be extremely oversold. The RSI right now for the S&P 500 is at a 30.9. So it's technically not oversold, but 30 is the limit. It gets below 30, 29.9, and you're technically then in oversold territory. So we could easily hit that tomorrow. Money flows are also pretty low at 21.3, but they've been in the teens before. Even just this year, they've been in the teens. So we can definitely go lower, and I think we are. So I'd prepare for that. Yep, I was shocked. The SPY was pumping. My puts were getting cooked. Then I came out with a plus 100% win today. Oh, that's awesome. Yep, I'll pull the SPY up. You go to the, I'm going to go to the 5-minute chart here. And, you know, I'm not very familiar with the SPY. Let me go back to the SPX for the S&P 500. And I can show you here much easier because I'm more comfortable with what's in front of me here. Right here, this is before the open, before the market opened this morning. Right to the left of this green rectangle. And let me take these lines out so it's a little clearer. There's a gap down in the market. This is exactly when the CPI data is released. There's a gap down in the market. Oh no, inflation, it didn't drop like we hoped. Then the market opens and within 10 minutes, boom, we're off to the races. This thing is pumping higher. And then we get to our high by 10:45 a.m. Eastern. And that's our high for the day. And then we start falling. We try to get a little bounce, but it doesn't really work. And then we try to get a little reprieve here around 2:30 in the afternoon. That didn't work. And then falling into the close. So it's not a pretty picture right now. And we can definitely get a capitulation down lower. I mean, the S&P can totally go to 3,000 from here. And that would line up right with where this yellow box is right here. And that's right about the corner right here where the purple line goes into the yellow box. That corner right there is right about 20% down. And that would technically put the S&P 500 in a bear market. And I think once we get that low, then we're starting to look for a bottom. So just some thoughts there, things that we talked about during the live stream. So if you are catching the end of this live stream, definitely go back and rewind and watch it. A ton of great information in there. I'll go ahead and wrap it up here. It's much later than I expected it to be. Remember, we are here live every day the market is open after the market closes to talk about the market, what happened, why it happened, and what to expect going forward. And right now, I'm expecting some pain in the market, like real pain, like a 20% type of pain in the S&P 500. I mean, the Nasdaq's already there. We look at the Nasdaq. Let me just pull that up right quick. The Nasdaq, what is it? 26.6% down year to date, setting a new low today. I mean, this could go to 11,000. The Nasdaq could go to 11,000. Big caps are the most important thing right now in the market for identifying rebounds or continued pain. If you could, this would be great. Outlook for tomorrow, pain. I do. I think we're going down. It is possible that the market gets oversold. We get a little bounce for a day. We have a green day, but it's going to be selling into strength. So whenever the market, if we do get a bounce Thursday, tomorrow, or Friday, if we get a bounce, the probability is, I think, small, but there's still that probability that we may. There will be selling as the market goes up. There will be more selling. People trying to exit their positions, wanting to close. And at this point, with the market going down as fast as it did, I mean, look at this. The past 3 days have been new lows for the year. So there's going to be some short squeezes that occur because of this swiftness that we have fallen, how quickly we have fallen. So that's also a possibility for what could cause a little rebound, but I think it comes right back down. I don't think we're at the bottom yet. And I guess that's the big point of view. Once we get to this area right here, then I would reevaluate. But on the S&P 500, we get 20% down. And right now we're sitting at 17.4% down year to date on the S&P 500. That's almost at that 20% level. So we're not that far away. So that's what I'm expecting short term for sure. Okay, Patreon members, I did leave a note in there very detailed about the CPI data today. So make sure you are on the lookout for that. That went out before the live stream. It's got details in there for what to be watching for. So definitely make sure you get that note. If you'd like to join us in beating this market, click the first link in the description. We'd love to have you there. I'd love to see you there. And if not, bare minimum, click that like button. Share this video wherever you can. Those two things are very helpful. And I appreciate your time and attention on this video today. And I look forward to seeing you tomorrow as we do another quick take on the market and answer your questions, because that's the most important part, answering your questions. So we do it every day the market is open, after the market has closed. And yeah, I'll wrap it up. Thanks again. You helped me make money today. Well, that is awesome. Great job. Great job. You are awesome. You are awesome. Remember that. Whether we're down or up for the day, whether you have a gain or loss, you're awesome. Just remember that. All right. Thank you so much for joining me this evening. Sorry about the first live stream and the mess up we had. Hopefully everyone was able to get the information and make good investing decisions. All right. Thank you, ladies and gentlemen. I'll see you tomorrow in the next live stream. And yeah, that's it. All right. Take care. Good night. See you in the next video.